Good morning. Sorry I'm a few minutes late getting started. This is Jim Barlow with OakTree Premium Finance, and today we're going to talk about National Life and Allianz Life. I called it Kaizen Insights, National Life and Life of the Southwest versus Allianz Life, finding the best fit. A little bit of a disclosure, I like them both. I think I don't want to say anything bad about either one because I don't have anything bad to say. They're just different, and I think different clients would use different ones for different reasons. That's why I said finding the best fit. National Life has controlled agents. I think they have a different word than that. And then they have independent sales. And so all independent sales are labeled with their Life of the Southwest brand, but it's National Life. That's something you probably would be fun to know. This is a short webinar. I think you'll find it fun, and I hope it's helpful. It actually took me much more time to think through things and compile things that I could imagine. But anyway, here we go. On the agenda, I'm going to talk about their strengths and ratings, their policy age definitions, their income net worth requirements, payment options, flexibility, living benefits, historical performance, index available bonus strategies, index lock feature that Allianz has, and kind of a summary takeaway, and also show you my new landing page that's been created recently. I hope I've covered everything that's important. If anyone notices you should have commented on this part, let me know, and when I do a edition of this again, I'll add that to it. So first, let's just talk about the two companies and their ratings. Allianz, on the left side, they're one of the largest insurance companies in the world. They're the highest rated index universal life provider. I think that's interesting information. Standard & Poor's, AM Best, and Moody's are the three major companies that evaluate the strength of companies. So in Standard & Poor's, they're third highest of 21 possible ratings, very strong, AA. AM Best, they're superior, A+, the second highest rating of 16 possible. The highest is A++. Moody's, they're rated high quality, very low risk, credit risk, AA3, fourth highest of 21. And then there's a compilation index they call the Comdex, and the highest is 100, and so they're rated 96, which is real close to perfection, not quite. National Life is the #1 selling index universal life in 2023. I think it's probably the #1 selling in 2024, but I couldn't find that factually stated online. But I know they are in 2023. Almost for the last 5 years, they're the #1 or the #2 selling index universal life in our country. Allianz will always be in the top 5 too. These are two of the best-selling index universal life policies there is. In National's Standard & Poor's, there's strong an A+ rating, fifth highest. In AM Best, they're A+ superior, second highest, the same as Allianz. Moody's, they're upper medium grade, low credit risk, A1, fifth highest, and they're in the 90th percentile of insurance companies. They're both superior, really good companies, and they work with NIW well to create to help improve Kaizen. So that's why they're the two major companies we use for Kaizen. There's three different things on one slide because it doesn't take much print. First, your policy age. Allianz uses actual age. The day your birthday is, the next day you're a day older, a year older. National Life is different. They use the nearest age. So company rounds to your closest birthday. So you turn the next birthday 6 months before. Interesting, because that's also a tad important because that's when prices go up on birthdays. So you want to know these things. Income and net worth. Let me start with National first here. They have a lower household income requirement, 100,000, with no net worth requirements. When Allianz, they have a 200,000 household income requirement with a 500 net worth, and if you don't have if you don't have any net worth, they require 400,000 household income. Just a little tougher to own Allianz than National. Payment options. Allianz has yearly or monthly. National only yearly. It wasn't too long ago that Allianz was the same, just had yearly. But about a year and a half ago, they adjusted things so they could do it monthly, and that's important for some people. So age, net worth and income, and payment options. Excuse me. Next is living benefits. There's really about 5 major living benefits that companies put on. And notice of these 5, National Life has all 5. And Allianz has the first 2. Yes, 5 is better than 2, but the Allianz, the first one, chronic illness, this is your long-term care. Access funds if unable to perform daily activities, or if you're in assisted living. This is probably the most important. Well, they're all important, but 70% of people over age 65 are going to need some long-term care during their lifetime. I have a little comment in a minute on that I'd like to show you. Allianz has that and National Life. Terminal illness, both of them have terminal illness, meaning you can tap part of the death benefit, 80, 90% or something, before you pass away. You're not working, you're terminally ill, you have expenses, medical, maybe other things, you could tap it before. That's the 2 that Allianz has. National has a lump sum for serious illness like cancer or heart attack. And we know this happens, cancer, lifetime 1 out of 2 men, 50%, 1 out of 3 women. Heart disease, lifetime risk 1 out of 3. And then they also have critical injury. This is car accidents. This is those things not expected. And the last, they have an Alzheimer's disease. It covers costs of Alzheimer's or cognitive care. And of course, 1 out of 9 of us is going to have that issue in our lives. If long living benefits is really, really important, probably you want to go with National. But Allianz still has the chronic illness, which is the most important. Now, this is a slide I added just this morning. And so maybe this is a little diversion from our topic, but maybe not. I have a swim spa, and I swim every morning. And I have a tether that I wear so I can sit there swimming. I don't have to think about running into the wall or anything. I can think about swimming and swimming harder, or I could just let my mind wander, and it started wandering today. We've traditionally bought life insurance based on how much insurance do I need if I'm gone? How much does the family needs to pay for the house payment and buy food and provide for them for education and everything? So we always think about, well, I think I need this amount of life insurance if I'm gone. But this question has never hit my mind before, but this is the question I had. Based on average cost of long-term care in assisted living facilities, how much life insurance coverage would I need to ensure that a policy with living benefit adequately covers this expense? I think it's probably a pretty good concept to explore. So I went back in the house and I went to ChatGPT and asked them. Here's what ChatGPT said. To determine life insurance face amount needed to cover the long-term care risk in assisted living facility, we need to consider average cost of assisted living. National median cost is about $5,000 per month. Annually, that'd be $60,000. Assume an average stay of 3 to 5 years. Total cost $180,000 to $300,000. This is word for word from ChatGPT. And then they said, living benefit payout from life insurance. Many index universal life policies with accelerated benefits allow you to access 1 to 4% of the face amount per month for long-term care. In a second query with ChatGPT, I said, hey, that 1 to 4%, what's the exact percent? And a different one, I put percentage based on policy terms, insured age, health status, and other underwriting factors. I'm actually going to do a little more homework today and see what Allianz and National provides, or if there's some clauses like that they don't know. But anyway, that's what these living benefits provide, 1 to 4% of the face amount. Example, if the policy allows 2% per month, a $500,000 policy would provide $10,000 per month. 2% of 500,000. And so 500,000 would cover the 5,000 per month, unless you're in a higher state. So I thought that was helpful. So you'd probably say, okay, I want to have policies on my wife and myself just to cover this long-term care. Anyway, that's the diversion. Let's go back to the comparison. Here's the indexes and also performance. And I did this chart blending both of them. So I put Allianz in red and National in black. Hopefully you can get a feel for it. They both offer the Standard & Poor's 500 index. And notice the caps are quite a bit different. With Allianz Life is 12.25 and with a National Life is 9.25. And then the participation rate is 100 and then 105 for National. And so using these caps, the 10-year average is on these two is 8.16 and 6.39. I think I'd probably say, well, if I'm going to just stay in the SP 500, I'll go with Allianz because they have probably higher caps most of the time. That's the way you'd probably think. Now let's look at the other options. Allianz says Bloomberg Dynamic Balance, and PIMCO Tactical Balance. They're called volatility controlled indexes. And National Life has two volatility controlled indexes too. A little different, but the same general thought. And notice here that there's no cap on these funds. So you get a participation rate. And notice the participation rate is not 100%. With Allianz, the Bloomberg is 190%, and the PIMCO is 185%. And then with National, the participation rate is 245 with the pace setter and 220 with the balanced trend. Wow. And so I love that, higher than 100%. So here's the 10-year averages. So the Bloomberg versus the pace setter, 9 versus 11. A lot of that is just based on a higher participation rate. And then the PIMCO and the balanced trend, 9 to 7. I think generally speaking, you notice that participation rate on these funds are higher with National, and maybe that'd be a reason I'd go with National if I was going to stay with the funds rather than the SP 500. Also, Allianz has 2 other funds. These are new funds they added during the summer, last summer, the SP 500 index and the blended futures index. And their participation rate are lower, or even lower than 100% with the futures index, 115. But notice you got a 10.48 10-year average with that 75% participation. I believe Allianz added these 2 to be able to have better performance long term and give more options. And if you blended the 4 Alliances, you're 9.2. If you blended the 2 National Life, 9.24. Wow, that's awfully close. Who wins this? I don't know. They're both very good. They both perform. Yeah, it'd be if you want more options, you'd go with Allianz. If you want to stay with the Standard & Poor's 500, or probably go with Allianz. Anyway, there's your indexes and there's your performance. Which bonus opportunity is right for you? Now, this whole blue slide was actually taken from an Allianz presentation. So we're going to talk, before I talk about that blue Allianz, let me mention what I typed in the bottom. National Life has bonuses, but they're just across the board. If you do the SP 500, you get a 0.25 bonus. If you're in the pace setter, you get a 0.75 currently. And if you're in the balance trend, 0.25. Pretty straightforward. Nothing fancy there. But the Allianz is a little fancier, a little more decisions that you need to make. The standard, no bonus. You want simplicity, and you really stay in the SP 500 for this no bonus. If you're in the funds, you can go with a classic, which is a 1% guaranteed flat rate bonus. And notice their comment that they made in these slides. Thinks index return could be less than 6%. There's no charge for this classic bonus. You just push click a button and get that classic bonus. Another one, they have a 15% multiplier bonus, and rather than the 1%, and this is also free. So those are the 2 that you depend on. You decide which one you want. Thinks indexes could return greater than 6%. In other words, that 15% bonus on top of the participation rate is going to make a difference. That's interesting. So that'd be kind of those first two. And then the last one thinks indexes could return more than 6%. This is a 40% bonus, but Allianz charges you 1% annual asset charge for this 40% bonus. You can change these bonuses from year to year. Our illustration program, I illustrate everything with a 1% classic bonus. There's the bonuses. A little fancier bonus program with Allianz rather than National. Now here's something, another slide that I took from Allianz, is they have an index lock. National does not have this index lock. What this means is you can do a manual lock. So the market's up 50%, whatever it is, and you say, oh, I think it's at a high and it's going to start going down. You can call up Allianz and say, I want to lock in those gains and go into money market until my anniversary. So you can do this index locks once a year. In National, you decide your allocation, and also Allianz on every anniversary. And in National, you just stay that allocation for the 12 months. But in Allianz, you can lock in your performance and move into money market for the rest of the year. And you can also set up a auto lock. In other words, if I go up 10% for the year, I want to just automatically lock out, pull out of the market, and you can do that. Allianz is the only company that does this, only company. And I told you, or I mentioned that this is a short presentation. Here's my summary. This is I worked a long time on this to try to make sure it was fair and proper. The two categories that are yellow: company strength, global, large, global recognized, strong, reputable. It's to me either one. It's a neutral. Age, Allianz uses actual age, National uses nearest age. Just another neutral to me, just a fact you need to know. And then the others, they start to, I changed the color code. The darker green means the winner in that category. Income net worth, I gave National the winner because they require less income, no net worth. And that would give us 1x. So that means the double X means this could be a decision maker just because of that. So 1x because it's the one that category, and double X because that might be a decision maker, it might be something that will important to you. Next we have monthly or yearly payments. And here it reversed, went to Allianz. They have monthly. If that's important, then and that's the only way you can do it, maybe, then you need to go with Allianz. So they're the double X. Then we have living benefits. Allianz has 2, and National has 5. Yes, I gave National the 1x, but then it could be the decision maker for, this living benefit's important to me, so I'm going to go with National because of that. Not that Allianz is bad, it's good, it just has the 3 more. Index options, 5 options with Allianz and 3 options with National. They're both green. Allianz is the darker green and gets the X. Is that a game breaker? I don't think so. So I didn't give it a double X. And then we have the bonus. They have 3 different options other than no bonus, and then this minimal with the national. So I gave it the single X. Is that a game breaker again? No. It's just a fact of it. And then we have the lock. National doesn't have that at all. Nobody else does. So they get the X. An interesting comment. People that try to time the market usually don't do a great job. So for me, is that lock important? For me personally, no. Trying to time the market is not something I like to do. But that's the summary. And you can see the game breakers that might just make a decision for you. I'll probably add this chart here to my regular webinars that I give. And that's the comparison for today. But I'd like to show you my new, not website, but new landing page. This is off of my phone. I just took a picture of it. And LIW, the creators of Kaizen, has put together a better links. And I put the current 4 links that they have. If you're leaning towards national, you go to the national link or the Allianz, or and we have the wealth transfer. They're going to be adding more links than even just these 4. And to go to these, there's the QR code. This is quite an the links were very good before, but these are an improvement. And you don't need to sign in. You don't have to have a password to go to these sites and crunch some numbers and go through the information. When you go into them, this is what the first thing you'll see. They have a video on the right, and these links are all linked to me. You can see my phone number at the top of my email. Anyway, they actually have a book. Learn about Kaizen. You can push that button, and well, before you push the button, if you keep scrolling down, you could estimate your benefits. You can put in your age and your income, how much you want to contribute, and it will crunch all the numbers and give this to you without a login and password. And then if you also want to really go, there's that book I mentioned, and here's the beginning. Let's learn about Kaizen, chapter 1, and you can see the beginning of the chapters across the top. And I decided to write down all the chapters. So here's the chapters all these links have. You've got Welcome to Kaizen, navigating the site, create your Kaizen, how it works, validating results, how it works. It has everything. So did I reduplicate some things? I'll have to look that over. Anyway, here's the chapters. The new links are really, really good. And I think it'll be a great help to people. And that's our short webinar for today. And there's that QR code to these links. For those who I don't have a full room for my presentation tomorrow night on the 13th, Thursday the 13th in Layton at Roosters. If you're interested in attending a presentation on the Alchemist, and a lot more detail about Kaizen than today for sure, then just give me a call and I'll see if we can fit you into our presentation. And with that, let's go take care of the rest of our day. Have a great day. Good to talk to you. Talk to you later. Bye.